Sandeep Tandon, founder and chief investment officer at Quant Mutual Fund, is with us. Sandeep, season's greetings to you. Wish you a very happy Diwali and a very happy New Year. You know, this year has taught the lesson of patience to retail investors, and they've actually, held back quite nicely, I guess. Now, what is your sense? I mean, are you expecting all-time highs to come and then the market to continue building up from here? Or as, some people say that usually after an all-time high, because we've had a pretty breathtaking October rally, do you expect some consolidation to go back? Basically, what are we in for as we get into the last quarter of the year?
See, you have to look at the background where this rally is coming from. Obviously, people were extremely bearish. First point, nervous about the trade. Okay, rupee depreciating significantly, and along with that, the metals and the commodities was rallying sharp. Okay, that was the background. And obviously, it's a very perfect background when we look at these inflection points. That's the reason, to be precise, we are largely 100% invested in, except the small cap, we are largely invested in the market. We have to understand when you get these data points and people conviction is missing and your data points are convincing bullish, then it's a time you have to get all into and participate this rally. So I think this rally has more legs. Maybe it has rallied significantly. Let's say, example, bank has rallied significant. Small profit booking can happen here and there. But largely, we are constructive on the market. Three reasons for that. First of all, rupee also has peaked out from a longer term perspective. And that is what I'm trying. Maybe from a short term phenomena, it has corrected and can recover a bit. But I think we are seeing a signs of some sort of USD INR peaking out. Means rupee has potential to appreciate. Or let me put this way, the pace of depreciation, that cycle is peaking out. The FIs, which has been significantly underweight, has reached also another important limit. And then we have seen the extreme high short positions completely missing. Their shorting has also spiked, the selling pressure which we have seen, and plus the underperformance which India has seen against both emerging market as well developed market. So I think the background is more constructive for Indian equities as compared to global equity. That's the first point. Second thing, the government initiative, whether you talk about interest rate easing sort of thing or GST benefit or the income tax benefit which we got in budget, I think a remarkable game changer events which has played out. And I think we have to understand that the lag effect these things plays out. If you're expecting that immediately not happen, but as the previous panel was talking about, after 3 years, at least I can also say we are seeing better sentiments around Diwali season. Markets people are seeing activities getting built. So I think this is a very constructive background for India equity. Can't be negative from the current levels.
Okay, all right. Hi, Sandeep. Good morning. Welcome to the show and wishing you, your team, all the very best. Well, the big deal that was announced just a few days ago was on RBL Bank. And y'all have kept the faith. If I look at it over the last 2 to 3 years, you'll have consistently been building a position out there. And if I got the number correct, the last reported position is around 6.5% of the bank y'all hold. Could you tell us what are your take on the deal? Your shareholder nod will be crucial as well. How happy are you with this sort of a deal that takes place and your initial assessment?
Nigel, yes, you rightly said, we are one of the largest shareholder of the company, and we have been holding for a couple of quarters or other few years.
Yeah.
And yes, when we spotted that opportunity, then stock was available at 5,000-6,000 crores of market cap. Banks, the broking company was significantly quoting at premium, wealth management company where bank license was available, and worst was behind that. So obviously it's a constructive background. And if I have to look at even whatever RBI has, if assuming that node has come and they're talking about 60% approval coming to a foreign names, obviously is a game changer transaction, not only for RBL, but also I look at more from a banking industry in general. But the only point we have highlighted to the management is that being one of the largest shareholder, we think prices has not been fair, because to sell a company controlling stake at the SEBI determined prices is not fair. Long deal is very constructive. There is no debate on that front. But from a shareholder perspective, we think the prices should be significantly higher than what was quoted, because if you're selling a controlling stake to an investor, then an investor has to pay a premium, a significant premium to the prevailing prices. That's the one important observation which we have.
That's an interesting point, Sandeep. You think the price should have been significantly higher But it is what it is. So, I mean, I know this is a bit of a premature question right now, but as a major investor, would you sort of keep the faith in the new Japanese management as it comes in? Because for the Japanese, it's going to be a new lay of the land. And actually, they're coming in several entities, right? There's a Japanese entrant in Yes Bank as well. And then there is Emirates NBD coming into RBL Bank. There's some talk of what happens with Shriram Finance as well. That could be another, Japanese entity, but it's still being speculated. So there's a lot happening with these foreign players now entering the Indian lending landscape. What do you make of it as a very active participant, as an investor? And are you thinking of staying the course in some of these transactions? Or do you feel that it's just safer to remain with the fully Indian-run, Indian-owned, operated, tried and tested names?
Frankly speaking, as I said, it's a game-changer transaction. I said the whole landscape of the financial services, particularly the smaller banks, will change. And which is a good news from the longer-term perspective, that it also showcased the faith in the banking system, the foreigners, whether it's talking about the UAE largest bank coming or from the Japanese bank coming to India. Obviously, it gives us a perspective that despite the noise and narrative which we have been hearing from the market right now, but I think it's a very constructive background, and I think a lot of it should be given to the RBI, the way they have managed things and the perception has maintained quite well robust for the Indian banking system. So I think it's a net is a constructive. All the step, if I have to look at it, and some more announcements expected from various other names which we are hearing. If that happens, I think it will re-rate the sector. And apart from re-rating, what is very important is the confidence building exercise. We have been struggling on the FDI front. So such transaction will not only for the banking, but it will boost overall confidence about India equities.
Okay, very quickly, Sandeep, before we let you go, the other big position you're built on is on the big boy Reliance Industries as well as Jio Financial Services. And it's good from a market perspective as well because the giant seems to have woken up post these results that we saw over the weekend as well. Your view, what are the triggers you're factoring in for these companies from here on? There could be an IPO on the cards. What else are you factoring in?
So, Nigel, as you know, we generally don't allow to comment on individual stocks since RBL was the very specific event which played out and larger interest we're talking about. We remain very constructive on the digital as a theme because we think banking sector globally will go to radical changes. Whatever banks you are seeing will not exist in this form in next 2 decades. So obviously, when we're talking about CBDC coming to picture and digital banking is the future. So obviously, these are the data points that you look at large macro perspective in identifying the stock. And similarly, we remain equally constructive on the green energy as a space or renewable energy, whatever name you want to call it, or even talk about telecom as a space. And plus for these so-called these large caps name has been not getting the right price or right valuation what they deserve, where some of the smaller names insignificant size quote a significant premium. That was the very simple thesis we have. These are giants company and they have delivered historically. So I like to maintain, we as a house, right from July 2024, we are saying we are in difficult phase of market, easy phase of market is over. And we are not on the extreme risk on what we have seen between 2020 and 2024. Hence, we are more skewed towards safety. So liquidity is the first priority. Safety is the second priority, and returns are the third need or the tertiary need. That's the way we define this period. And hence, we felt some of these names which you talked about has right opportunity. And that's the reason we own very substantial holding in our portfolio. And we remain constructive on the same.
All right, Sandeep, great conversation. We would have loved to chat more, but out of time. Thank you very much for joining us today.